All right, let's kickstart the show then with a discussion of the day. The Boston Consulting Group, or BCG, along with Matrix Partners India, has unveiled their annual Fintech report, which speaks about the state of the Fintech Union. Let's connect with Vikram Vaidyanathan, who is the Managing Director at Matrix Partners India. Vikram, good to have you on board. So many highlights from the report, but why don't we just start off by talking about the sizable portion that the Indian fintech market currently holds? Where do we stand as compared to the rest of the globe, and what has been the impact of the funding winter on the fintech space back home?
Yeah. So there's a couple of questions in there. The first is, what's the size of the fintech market? Overall, if you look at India's financial services journey, uh, depending on category, anywhere between 10 to 40% of Indians will have access to real financial services. Within that, I think fintech is going to play a pivotal role in driving penetration of those financial services to more and more Indians in each of those categories. If I look at the overall revenue pool, then fintech today would account for about 5% of the overall revenue. And I'm looking at fintechs alone and not the incumbents who are also becoming fintechs in themselves. We see that 5% slowly going to 10% and 20% by the end of this decade.
Okay.
I think the second part of your question was around the funding winter. I would say there are two parts to it. One is in 2021, given the growth and the funding environment globally, most large financial companies and fintechs pulled in a couple of years of funding, because what the funding that they needed in 2022, as well as parts of 2023, they actually pulled into 2021. And the senior fintech founders and experienced financial entrepreneurs are really smart. They have kept that dry powder with themselves, built slowly, build capabilities that they need for the long term. And so they don't need to raise money. So they are very easily able to ride out this funding winter. There are a few who needed to raise money through 2022 and 2023. I would say almost all of them were able to raise money, albeit not at the same prices and maybe not the same amounts that they were able to. But there is absolutely enough money for founders and companies that deserve to raise money. The last thing I would say is India overall in the world is the shining spot for fintech, primarily because there's the India stack, which developed which enabled rather this entire ecosystem that we've been able to build. But the second part of this is India is very early in its financial services journey in being able to provide financial services to all citizens. So the pie is growing for everyone. It is not that fintechs are taking away share of pie from incumbents. Both are growing the pie together.
Okay, that's pretty interesting. And let's also understand what the outlook is in terms of the profitability and sustainable growth in terms of financial metrics. How is it that the fintechs have been performing, and what is the outlook in terms of profitability down the line? Is it looking a lot more optimistic?
So it is the biggest question that everyone is asking the fintech ecosystem, and rightfully so. I think in our report, we talk about the Indian fintech ecosystem going into the middle journey. Let me just unpack that comment a little bit. The 0 to 1 journey is about finding PMF and whether users need you. It's very clear. Almost every user in India needs the fintech ecosystem and has adopted some fintech product or the other. And it's gone from a push product where you're trying to convince people, please use this, to a pull product where people want to use this every day on their own. So we've crossed that 0 to 1 journey. Now we're in that middle 1 to 10 journey where, rightfully so, the ecosystem is being asked the tough questions on, are you going to be around forever? So are you going to be profitable? Are you going to be sustainable? And I would say everyone in the fintech ecosystem recognizes this. And the answer to that question and challenge is yes, the majority of this ecosystem is going towards profitability and sustainability very soon. In our survey, you will see that across categories, 50 to 60% of respondents are looking at that profitability in 12 to 18 months. We have seen those pockets of profitability already across categories, whether if you take Zerodha in wealth tech, we have our own companies, 5-Star and Oxyzo in lending. Same thing is true for the largest payment companies, whether it is PhonePe, Razorpay, Pine, everybody preparing to become profitable in the short term. So we are absolutely going to see that profitability and sustainability question being answered resoundingly by the fintech ecosystem.
Okay, fair enough. That does sound pretty promising. Walk us through the outlook then in terms of fintech partnerships. Is that something that is likely to increase down the line? How are you looking at some of these companies as well, leveraging technology for further financial inclusion?
So we just came out of, I would say, almost the world's largest fintech conference, which is GFF in Mumbai. And I think from all the conversation between the incumbents, whether it's banks, insurance companies, the largest wealth players, and the fintechs, is that of crafting win-win partnerships where they are growing each other's pie. And that's changed significantly from fintechs thinking that they're competing with banks and vice versa. So today they're trying to figure out how do you get new users for each other, and how do you increase the share of revenue for each other. So that's the nature of partnerships. So I would encourage almost every fintech entrepreneur to be thinking about these partnerships in that win-win format. The second thing is partnerships with sort of the regulator enablers like the DPI team or NPCI and so on. I think again those conversations are today more transparent than ever. When you look at the RBI, they have put together a fintech department just last year. And again, RBI is one of the most progressive regulators in the world. They have done this where there's now a dedicated department for fintech, and the conversations between a founder and the RBI again are happening almost on a weekly basis. I heard from the RBI they are meeting anywhere between 2 to 3 fintech founders or a group of fintech founders almost on a daily basis. So the nature of partnerships in the ecosystem is also one of how do we move the entire ecosystem forward versus figuring out what is my share of the pie and so on. So again, we're very bullish about the ecosystem. I don't want to make it sound like it's all sort of a bed of roses. We have had over the last 12 to 18 months bad actors who have pushed the boundaries of gray, and therefore the regulator has had to take has had to take action and bring in more regulation. I would say that is part of growing pains. And if you look at the regulator perspective, they are trying to manage systemic risks and risks for users and borrowers, and therefore they are doing the right thing. I think it's incumbent on the fintech ecosystem to engage with the regulator to say that this is what we're going to do, and how do we do this in a way such that you will not, you will not choose to put very strict guardrails on this at a later point in time.
Mm-hmm. And what about a lot of newer players emerging in this space? How are you looking at the entry of bigger players as well? Geo Financial, for example, coming into this space, shaking up the overall ecosystem, competition heating up, smaller players. Do you think that it's going to be players who couldn't sustain themselves, perhaps now moving out of the system? What is the outlook on some of the smaller players in light of competition?
So again, I think it is not that one person winning is another person losing in the financial services landscape. Absolutely, large players and large capital coming into the market is going to move things around. But overall, it is a good thing that large strategic capital is coming in, especially for the smaller fintechs, because now they have more people that they can partner with. If you look at India's banking landscape, even though there are hundreds of banks, there are only a few that fintechs can also partner with in a stable manner, where the bank tech is also good enough for fintechs to partner with them. And therefore, the larger players coming in actually, I think, increases the pie in a shorter period. In the long term, yes, there's going to be a fight for the top 10 in financial services. My hypothesis prediction today would be it is similar to what it will be globally, where there will be 5 incumbents or 5 of what you would think traditional players and 5 fintechs. And I think that's where this landscape is heading towards. There will be a lot of churn in the middle. Let's call it a 10 to 15-year period where there will be consolidation, there will be M&As happening. I don't think that's going to happen in the short term. It's probably going to happen in the medium term.
Okay. Can you just walk us through then some of the other key takeaways from the report? Anything you believe that really stood out? The fact that we are seeing a lot of fintechs as well now moving up the valuation pyramid, what the outlook is in terms of digital lenders that are vying for NBFC licenses. Is that a trend that you believe could continue?
So one, in terms of what you said on the valuation pyramid, we expect that trend line to continue. I think I made this point earlier that for the people who raised money in 2021 at what was then heady prices, almost all of them have grown into value. What I mean by that is, if the revenue multiple or the EBITDA or profit multiple was high in 2021, today it doesn't look that high because they have grown anywhere between 50 to 100% YOY. And therefore, some of these companies are getting prepared for IPO. Some of these companies are pushing their IPO out by 24 months and therefore are raising money today. So you will see rounds happening across the board in these companies. And again, uh, India is a shining spot in the fintech universe globally, and therefore global interest is returning to Indian fintechs. The second part of your question was around NBFCs and lending fintechs applying for NBFCs. Overall, as any fintech scales, they will need to be part of the regulatory framework. So they need to embrace regulation as a feature, not a bug, very early in their journey. And almost all fintechs are realizing that, and therefore embracing that regulatory framework earlier and earlier in their journey. So for lending fintechs, that's NBFC. I would say that is not a one size fits all answer for everyone. And across the board in our companies, I think people are being very careful to figure out whether it's a P2P NBFC that they should be looking at, whether it is a PPI license they should be looking at, whether they should need to be a TSP, whether they need to be a BC. So I think founders are making careful choices on what is the license or position that they adopt in the financial services supply chain.
Good to have you on board. Thanks so much for joining in. It's been very interesting getting in the insights from this latest report.
Thanks so much. Thanks for having me.